Welcome to this video. Today we will describe the developments in technology and the various business models that reshape trade finance. We will have a look at how trade finance is reshaping, how trade finance is being reshaped, and how business models are evolving, and how the new fintechs and the technologies and the innovations are making a changes in the industry. The landscape is undergoing not small changes but a seismic shift. That is because of the rapid advances in the technology and innovation in business models, and this has been happening after the COVID issue because there was a need for the industry and demand for better ways of doing cross-border trade. Earlier there were only incremental improvements, but now the fundamental shift is happening, and the reshaping of the way of the movement of not only goods and services but the documents and the payment and the way banks and customers interact is undergoing a paradigm shift. Let us explore the drivers for change. Digitization. In the context of cross-border trade, there have been lots of improvements or changes or developments from the digitization angle. The use of digital technologies, including the new blockchain methods, use of artificial intelligence to analyze the trade data, and using the Internet of Things for the movement of the documents and goods is increasing efficiency not only for the banks but also for the buyers, sellers, forwarders, insurance agents, and other stakeholders in the supply chain. It also increases transparency so that the customs agency are happy, and it includes security in the cross-border trade so that compliance becomes easy. Then comes the e-commerce platforms. The rise of e-commerce platform has made it easier for the businesses to reach to customers anywhere in the world sitting at their hometown. Customers and consumers can access products internationally. So has allowed access to the global market. This has simplified cross-border transactions. This has made easy for selling and buying from across the borders. This has made democratization of the goods and services. And this also helps, because it is digital, a data-driven insight and information for both the buyer as well as the seller to understand where they stand with respect to their buy-sell behavior, where the pattern is, where the trend is, and then enable them to make decisions which are more informed compared to was it was before the e-commerce and digitization came into so much of an influence. The digital payment systems like mobile payments, online payment, cryptocurrencies were also facilitating trade. The cryptocurrency has made lots of impact, positive and negative, on the way the funds are moved across the border. That is why, in addition to the traditional banking system methods, certain central banks are coming with CBDCs, central bank digital currency. Then comes the trade financing technologies. Technologies such as blockchain or machine learning or data analytics are also being used to make good use of the data that we get from the trade transaction to understand what or why we should move to a better method. The digitization also takes care of the issuance of letter of credit or issuance of the bills of lading or delivery of goods without surrender of the original BL, etc. The factoring and forfeiting, a buy and sell of the risk, also has become easy because of the data analytics capabilities. The business model and innovations are also happening. Looking at logistics, as we understood earlier, the Internet of Things is helping the speed and efficiency. The delivery through drones is also happening when it becomes a retail delivery. There are smart warehouses which keeps on sending messages to the buyer and seller, how much is the stock, what is the lead time, and how much the order can be supplied at what points in time based on the data availability on a real-time online basis. Now we have discussed the blockchain applications and the capabilities of the analytics. Now, emerging business models. Emerging business models is subscription-based services. So, software as a service, SaaS, we have seen, but then there are so many other things: service as a service, and business product as a service, and business knowledge processing, outsourcing, knowledge sharing, etc. are also emerging. So, there is a shared service center or a global capacity centers being established to facilitate cross-border trade. Companies are changing the way they operate and interact with the customer based on this SBS or PaaS, etc. Some companies are even sharing their infrastructure with others. Then comes the impact of the global marketplaces. Now Amazon, though it is present in so many other countries, it is mostly the Amazon.com of the US or the Alibaba.com of the China or the eBays are becoming a global market space where most of the people look to as the go-to place. That is the first point of contact for us to review what is happening elsewhere, not only for the retail but for the corporate client also, for the bulk purchases or the wholesale purchases also. That gives a benchmark as to where the market is. Then comes the supply chain visibility. As we discussed, the Internet of Things or the blockchain or data analytics are providing greater visibility. And what is happening? So the supply chain is becoming more adapted, more adaptable, and it is helping to track the goods, services, documents real time. And in turn, the payment is real time. So this helps also to identify what are the bottlenecks, what are the disruptions that could come up, and what risk we might face. So there is a benefit of real-time tracking, benefit of secure and transparent data, and because of the security of the data and transparency of the data, the compliance, the customs, the tax and other angles can be easily handled. And then there is also scope for identification of potential disruptions in the supply chain. Customs clearance also becomes easy because of the IoT and data analytics. Now for customs clearance in many countries, the automated clearance is happening. Digital declarations are coming into place. The clearance process is streamlined based on the technology, so that there is a reduction in time as well as cost. These developments are having a significant impact on the industry. There is an improvement and increase in efficiency. There is an improvement in the transparency. There is a global access to the markets as well as to the customers. The business models gives additional revenue. The improvement in supply chain makes things more efficient and effective control of the disruption and potential risks. And then the need for significant investment in new technology is there, so which gives business to other industries like infrastructure. And then traditional business models are at times getting disturbed. The mom and pop stores are becoming online stores. There is a need for new skills for the staff to be employed or the existing staff to be reskilled. The scope or need for focusing on the cybersecurity is growing day by day. It is growing because the data breach or really reputational risk as well as security risk. So there is a need for some sort of a regulatory framework, not to control but to create guardrails for the industries to move forward. Thanks for watching this video. We will come back again with another session on trade and its risks.